The last ratio in solvency ratios is proprietary ratio. Now, what does proprietary ratio tell us? Proprietary ratio gives us a relationship between equity and total assets. So, formula wise, this ratio is equal to equity, and by equity we mean shareholders' funds upon total assets. So students, proprietary ratio is equal to equity upon total assets. This ratio gives us a clear indication of how much times our total assets have been funded by the shareholders' funds. That is, we have total assets in the business. That includes fixed assets and current assets. Obviously, to purchase these assets, we require funds. So this ratio gives us an indication of how much of these have been funded out of shareholders' funds. Now, coming to the components, how do we calculate these? We all know that total assets are equal to fixed assets plus current assets, and equity, that is shareholders' funds, is equal to share capital plus reserves that belong to the shareholders minus fictitious asset. So now students, we have both the components here. Total assets is equal to fixed assets plus current assets, and equity or the shareholders funds are equal to share capital, which includes both equity and preference. Reserves that belong to the owners, it includes both free reserves and your capital reserves, something like the nature of securities premium which belongs to the shareholder. And out of this total, all the miscellaneous expenses, fictitious assets, are deducted.